Hey everyone, and welcome back for another deep dive with us. Today we're going to be looking at the current economic landscape and trying to answer this question that's on everyone's mind: Is stagflation really a threat?
It's certainly a hot topic these days.
It is. It feels like everywhere you turn, people are talking about this possible return to, that nasty mix of high inflation, stagnant growth, and high unemployment. Kind of gives me 1970s vibes.
I can see why people are drawing those parallels.
Yeah. So to get to the bottom of this, we've got a whole bunch of analyses from economists and financial experts, some recent news articles, even a glimpse into how those options traders are reacting out there.
It's definitely worth a deep dive. And I think what's particularly striking is that, we keep hearing all this talk about how inflation is cooling off, right? But when you look at the numbers, the story's a little more complicated. Like in the US, inflation is currently at 3%.
That's not nothing?
No, it's not. And when you look at core inflation, remember, that's inflation without the volatile food and energy prices. It's even higher at 3.3%.
Okay, so that's even stickier then.
Exactly.
And now I remember one of the articles mentioned something called sticky CPI. What is that all about?
Right. So the sticky CPI, or the sticky price consumer price index, it basically tracks goods and services where the prices don't change very often. So think about things like haircuts or, car repairs, that sort of thing.
Okay, got it.
And because these prices aren't as affected by those, short-term ups and downs, they give us a better idea of what's happening with the underlying longer-term inflation trends. And the concerning thing is the sticky CPI is actually higher than the overall headline inflation numbers.
Oh, wow. So it's like a sneak peek into where inflation might be headed. That's
Yeah.
not very comforting, is it?
It does raise some concerns, yeah. And then, as if that wasn't enough, you've got some everyday items that are becoming so much more expensive. That article, A Whiff of Stagflation, they pointed out that egg prices are up like a crazy 15.2% because of that avian flu outbreak we had last year.
I did notice that at the grocery store.
And then you've got climate change also throwing a wrench in things with those bad harvests. That's what's driving up those cocoa and coffee prices.
Oof. That's going to hit a lot of people right where it hurts. I guess rising prices wouldn't be as scary if the economy was, like, booming right now.
You're absolutely right. A strong economy can absorb those price increases a bit better. But unfortunately, that's not really the situation we're in at the moment. The U.S. economy actually grew at a slower pace in the last quarter of 2024. In fact, it was the slowest growth in 3 quarters. And then on top of that, business investment, which is such a key driver of economic growth, it's actually contracting. And it's a similar story playing out in the UK and the Eurozone, too.
Mm.
They're dealing with that same combo of rising inflation and just sluggish, slow growth.
So it sounds like we're dealing with inflation that's kind of stickier than we'd hoped for and economic growth that seems to be pumping the brakes a little bit.
Yeah.
I know this next part might be a little politically charged, but one of the sources we looked at actually brought up President Trump's policies as a potential factor in all of this.
Yes, that's right. Some economists, and this includes Nobel laureate Joseph Stiglitz, they're arguing that some of the policies, specifically the tariffs and the proposed government spending cuts, could actually make this whole situation worse.
Okay, so how could those policies contribute to stagflation? Can you break that down for us a little bit?
Sure. So basically, tariffs act like a tax on imported goods, which makes those goods more expensive. This, of course, can fuel inflation because businesses are going to pass those increased costs on to, us, the consumers.
Yeah, makes sense. And so then it seems like it's kind of a double whammy because, like that Wells Fargo analyst predicted, the tariffs could also slow down economic growth. If businesses are uncertain about what's going to happen, they're less likely to invest and take risks. And that's especially concerning with those tariffs on Mexico and Canada possibly going into effect.
Exactly. It creates a lot of uncertainty for businesses. And then if you add the proposed government spending cuts to the mix, well, that could reduce demand in the economy even further, potentially leading to slower growth and, maybe even job losses. So all of this puts the Federal Reserve in a really tricky spot.
Yeah, it sounds like they're stuck between a rock and a hard place.
That's a good way to put it. If they raised interest rates to try and fight inflation, it risks really suppressing economic growth even more and possibly increasing unemployment. But if they lower rates to try and stimulate the economy, then it could make inflation even worse. So it's a very delicate balancing act, and they definitely don't want to repeat the mistakes that were made back in the 1970s when stagflation really took hold.
It really does feel like we're walking a tightrope here.
It does. And, another interesting thing is that We're starting to see some signs of nervousness in the financial markets, particularly in the options market.
Oh, really? What's going on there?
Well, there's been a surge in demand for what they call crash protection, specifically VIX call options. So the VIX, it's often called the fear index, and it measures market volatility. When investors buy VIX call options, they're essentially betting that market volatility, that fear in the market, is going to increase significantly.
So they're kind of bracing for a potential market downturn. Your online privacy is at risk. Trackers, hackers, and restrictions are everywhere. But with Surfshark VPN, you can browse, stream, and shop securely on unlimited devices. Get military-grade encryption, access to global content, and a strict no-logs policy, all in one powerful VPN. Right now, grab a 2-year Surfshark subscription at an unbeatable price on Stack Social. Stay private, stay secure, stay free.
Sure, but there are also some key differences. For one thing, inflation, while concerning, isn't as high as it was back then.
That's true.
And the global economic landscape is just vastly different today. We have things like globalization and all the technological advancements that are playing a much bigger role now.
Okay, so maybe we're not heading for a full-blown 1970s redux, but it does sound like there are some real risks here. What are some of the potential scenarios that could unfold from this point? Like, where could this all go from here?
Well, it is true. There are a lot of different ways things could go. One possibility is that inflation eases up, growth picks up, and the Fed manages to steer us towards a soft landing. That would be the best case.
Fingers crossed for that one, right? But what about some of the other possibilities? What else could happen?
Well, another scenario is that inflation turns out to be even more stubborn than anyone expected, which would force the Fed to raise those interest rates more aggressively. And if they have to do that, well, it could really put a damper on economic growth, maybe even tipping the U.S. into a recession.
A recession. Now, that's a word nobody wants to hear.
No. I know. It can sound scary. But it is important to remember that recessions are a natural part of the economic cycle. They don't necessarily have to be catastrophic. And they often actually pave the way for future growth, kind of like clearing out the deadwood to make way for new things.
That's a good point. So, okay, worst case scenario here. Could we actually see, like, a full-blown 1970s style stagflation?
Well, while it's not totally impossible, most economists think that's unlikely. I mean, as we've been talking about, inflation isn't as out of control as it was back then.
Right.
And the economic backdrop is very different today. But, if inflation were to really spiral out of control and economic growth were to come to a screeching halt, then yeah, we could be looking at a really tough situation.
It does all sound a bit like a choose-your-own-adventure story, with each path leading to a different economic ending.
I like that analogy, but one thing I find really interesting is this disconnect we're seeing between like the economic data and how investors are actually reacting.
Oh, what do you mean by that?
Well, economists are out here raising all these alarm bells about stagflation, right? But the stock market, it's kind of just shrugging it all off. The U.S. stock market is actually still near those record highs.
Huh. That is interesting. Why do you think that is? Are investors just completely ignoring the potential risks here?
Well, there are a few possible explanations. Some investors, maybe they're just holding on to this belief that strong corporate earnings are going to continue, even with all these economic challenges swirling around.
Okay, so they're optimistic.
Yeah, you could say that. And then others, they might be betting that President Trump won't actually go through with all those protectionist threats.
Right, the tariffs and all of that.
Exactly. And then there's also that buy the dip mentality, the idea that anytime the market dips, it's just a good opportunity to buy more stocks.
But isn't that a pretty risky strategy? What if all those optimistic assumptions turn out to be wrong?
It definitely is a risk. Corporate earnings growth is predicted to slow down this year.
Oh.
And a lot of companies, particularly those outside the really hot tech sector, they're facing rising costs and their profit margins are shrinking. And then if those tariffs actually do trigger a full-blown trade war, that could have huge ripple effects throughout the global economy, hurting both U.S. companies and international companies.
I see what you mean. That makes a lot of sense. And speaking of international companies, it's pretty interesting that overseas markets have actually been doing better than the U.S. market so far this year.
You're right. Some analysts are saying that it's because those foreign markets have more attractive valuations right now, and there's this feeling that the U.S. market might be a little overvalued after such a long bull run.
So does that mean that investors should just dump all their U.S. stocks and jump ship to international markets?
I wouldn't jump to any conclusions just yet. It's really important to remember that investing is a long game. Chasing those short-term gains can be risky. Plus, international markets come with their own set of risks and uncertainties. The global economic landscape is so interconnected. What happens in one part of the world can definitely have consequences everywhere else.
It does feel like there are a ton of moving parts right now. It's hard to even know which way to turn. Stagflation fears, trade tensions, market volatility. It's just a lot to keep track of.
You're telling me it's a very complex and dynamic environment out there, but that's exactly why it's so important to stay informed, do your research, and make investment decisions that make sense for your own risk tolerance and your long-term goals. Don't let fear or hype be the thing that dictates your actions.
That's really good advice. But beyond just the financial implications of all of this, I'm also curious about the human impact. At the end of the day, these economic forces are really affecting people's lives.
Absolutely. I mean, it's easy to get caught up in the numbers and charts and all that, but we do need to remember that economics is ultimately about people. It's about their jobs, their savings, their ability to take care of their families.
So let's shift gears a little bit and talk about that human side of things for a minute. What could be some of the consequences for everyday people if this stagflation scenario actually happens? How would it affect them?
Well, one of the most immediate and significant impacts would be on people's purchasing power. As prices go up, but wages don't necessarily keep pace, people are going to be able to buy less with the same amount of money. Basically, their standard of living could go down.
And I imagine that would be especially hard for people on fixed incomes or those who don't have a lot of savings.
Exactly. Think about retirees, for example, who depend on pensions or have fixed income investments. Their purchasing power could be significantly eroded, and low-income families who are already struggling to make ends meet, they're going to face even bigger challenges as those costs for necessities like food, housing, and transportation continue to climb.
Yeah, it's like this ripple effect, isn't it? Higher prices lead to less spending, which hurts businesses, and then that can ultimately lead to job losses. It's a vicious cycle.
You got it. A stagflationary environment can create this downward spiral where businesses are dealing with rising costs and declining demand, which might force them to lay off workers. And then, of course, that reduces consumer spending even more, making the economic slowdown even worse. So it's not just about having to tighten those budgets, it's also about the possibility of increased unemployment and widespread economic hardship.
And then on top of all that, we can't forget about the psychological impact. This combination of rising prices, slow growth, and high unemployment, it can create this sense of pessimism and anxiety, which just makes everything worse for consumers and businesses.
It's true. It can really feel like you're stuck in a rut, both economically and emotionally. That's why it's so important to have these open and honest conversations about these challenges. We need to really understand what the potential consequences are and figure out how we can minimize those risks.
Okay, so let's talk about that. What can people do to prepare for a potential stagflationary environment? We talked about investment strategies a little bit earlier, but are there other steps people can take? What can they do to get ready?
Absolutely. From a purely financial standpoint, diversification is key. Having a mix of assets, stocks, bonds, maybe even some commodities like gold can help to spread that risk and possibly soften the blow if one asset class isn't doing well.
And of course, having an emergency fund is always a good idea.
You can't go wrong with that. Having some cash reserves can be a huge safety net if you have unexpected expenses or if you lose your job.
Yeah, that's true.
But beyond just the financial preparation, it's also important to focus on what you have control over. Look for ways to cut down on your expenses, find ways to increase your income, and invest in developing skills that could make you more valuable in the job market.
So it's all about being proactive and adaptable, right? We can't always predict the future, but we can definitely give ourselves the tools and knowledge to handle whatever challenges come our way.
That's exactly it. The future is unpredictable, but we don't have to be caught off guard.
That's a good point. Okay, so we've really explored this threat of stagflation, looked at what the potential consequences could be, and talked about ways to get ready. Is there anything else you want to add before we wrap up this deep dive?
I think it's important to remember, we were talking about being proactive and adaptable,
Yeah.
right? And I think it's important to think about how we can advocate for policies that promote economic resilience and also protect those vulnerable populations. That stagflation, or any economic downturn, it tends to disproportionately impact, the people who are already struggling.
That's so true. It's not just about protecting our own individual finances. It's about advocating for a system that works for everyone.
Mm.
So what are some of those specific policy measures that you're thinking about that could help mitigate those risks of stagflation and protect, those who are the most vulnerable?
Well, I think, for starters, policies aimed at boosting productivity and fostering innovation, those can really help to increase economic growth and offset some of those inflationary pressures. Investing in things like education and infrastructure and research and development, those are all things that can help create a more dynamic and competitive economy.
It sounds like a long-term strategy, but an important one for sure.
Yeah, exactly. And I think, more in the short term, targeted measures to support those who are most affected by rising prices, those can make a real difference too. Things like, expanding access to affordable housing or providing food assistance or offering subsidies for essential goods and services.
Yeah, it's about creating that safety net so that everyone has a fighting chance to weather the storm.
Exactly. And, it's also important to remember that stagflation or any kind of economic challenge, really, it can also be an opportunity for innovation and coming up with creative solutions. We saw that back in the 1970s when businesses and individuals had to figure out new ways to adapt to that changing economic landscape. And I think we might see some of that same ingenuity emerge if we face similar challenges today.
That's a good point. There's always potential for growth and progress, even in the face of adversity.
That's right. And, I think that's a powerful message to leave our listeners with. Stay informed, stay engaged, and stay hopeful. The economy is a complex system, always changing, but we do have the power to shape it and build a more resilient and equitable future.
I like that. Well said.
Yeah.
Well, thank you so much for joining us on this deep dive into the potential threat of stagflation.
Yeah.
We've covered a lot of ground here, from the economic indicators to those potential consequences, and even explored some proactive steps we can all take to prepare.
It's been a pleasure.
And to our listeners, the more informed we are, the better equipped we'll be to navigate this complex world of economics and create a future that works for all of us. So until next time, keep exploring, keep learning, and keep those deep dives going.